Ladies and gentlemen, good day and welcome to the Aegis Logistics Limited Q1 FY24 earnings conference call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Raj Chandaria, Chairman and MD. Thank you, and over to you, sir.
Thank you very much. Good afternoon. I'm joined by our CFO, Mr. Murad Moldina, and we'll be presenting the Q1 financial results. So we're pleased to inform you that we have delivered another quarter of strong performance, with Q1 EBITDA growing by 30% year-on-year, and profit after tax growing by 23% as compared to the same period last year. So I'd like to remind everyone that the mission of our company is to store and distribute bulk liquids and gases in a safe and sustainable manner, and this quarter we did just that. There were no environmental or safety incidents in any of the group's operations, an achievement which we hope to continue repeating quarter after quarter. Now, the strong growth momentum that we saw last year in both liquids and gases has continued during the first quarter of this year, and this once again highlights the great trust that our customers place in Aegis and our capabilities. And this provides us the confidence to deliver an annual performance consistent with the performance demonstrated during this quarter. And looking further out, all the growth projects which we announced last quarter are progressing well, on budget and on time, which also bodes well for the future. And as an indication that we have in the sustainability of our growth agenda and our robust financial position, the Board of Directors has declared an interim dividend of rupees 2.50, 2 rupees 50 paise per share. Now, I'd now like to hand over to our CFO, Mr. Moldina, to give you more details of the financial performance. All right?
Yeah. Good afternoon. Moving on to the performance for the quarter, we delivered a highest lifetime Q1 profit before tax and profit after tax. The revenues in Q1 FY24 decreased by 6% on a consolidated basis, led by decreased volumes in sourcing segment along with some corrections in LPG prices. EBITDA for Q1 FY24 increased by 30% on a consolidated basis. In liquid division, we stored some high margin products, and in gas division, we had higher share of logistics and distribution business. We have delivered a highest ever Q1 PAT of 133 crores, a growth of 23% on a year-on-year basis. EPS also increased to 3.3 compared to 2.95 in FY22. Now going on to the segments, liquid division, the revenues for Q1 FY24 were 115 crores, an increase of 42% on a year-on-year basis. We delivered a highest ever EBITDA for the quarter of rupees 78.5 crores versus 55 crores in the previous year, which is again an increase of 43%. Gas division, revenues in Q1 FY24 were 1,986 crore versus 2,155 crores in Q1 FY23, a decrease of 8% year-on-year, attributable to a slight decrease in sourcing volumes and lower LPG prices as compared to the same period last year. EBITDA for Q1 FY24 was 133.5 crores versus 108.6 crore in Q1 FY23, delivering a growth of 23%. We continue to see growth for the gas division with increasing volumes in throughput and distribution. Sourcing division also remains stable with a marginal drop in volumes. Let me give you the volume details of each sub-segment. Throughput volumes. The LPG volumes for Q1 FY24 handled at our 4 terminals Mumbai, Haldia, Kandla and Pipavav were 8.81 lakh metric ton versus 6.37 lakh metric tons in Q1 FY23. Haldia, the operations at Haldia ports are now normal. Pipavav, the jetty at Pipavav has also been upgraded to handle VLGC, and we expect the first VLGC to berth very soon. Mumbai continues to operate at full capacity with IOCL, BPCL and HPCL bringing imports. As for Kandla, as mentioned in the earlier call, it is fully operational and is delivering on our expectations. Now, distribution volumes. We delivered a lifetime record volume in distribution business in Q1 FY24. The volumes increased by 86% as against Q1 FY23 volumes. The commercial, industrial and auto segment combined handled 1.59 lakh metric tons in Q1 FY24 against 0.85 lakh metric tons in Q1 FY23, a growth of a whopping 86%. This is a lifetime record performance for this division with stable margins. With Kandla LPG terminal operationally stabilized, we believe that the distribution business will continue to register impressive growth. Let me remind you here, the improvement of performance in the distribution division, which includes industrial, commercial as well as auto gas, immediately reflects in the overall profitability as it's a higher margin business compared to the sourcing and throughput business. The business is also not capex intensive, and hence the performance of this subdivision improves our ROCE significantly. Sourcing volume. The sales volume of the sourcing business in Q1 FY24 was 2.26 lakh metric tons versus 2.3 lakh metric tons in Q1 FY23. As expected, we are expecting a stable growth in this segment in FY24 also. Before we hand over to the moderator for Q&A, let me give you a brief on the projects that are under implementation. New capacity expansion at JNPT for the liquid terminal is progressing well, and the same is expected to be operational by end of FY24. Liquid capacity at Mangalore and Kochi are expected to be operational in FY24 itself. LPG capacity expansion at Pipavav and Mangalore are also progressing well, and the same would be operational in FY25. We have also started construction of a LPG bottling plant at Kandla, in addition to what we completed at Pipavav just a while ago. And this will also be operational in FY24. With this, I now hand over the line to the moderator to start with the question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Chirag Vikaria from Budrani Group. Please go ahead.
Good afternoon, sir. So just wanted
to... Can you please speak up?
Yeah, am I audible now?
Yeah.
Okay, sir, just wanted to understand, in Q4, vis-a-vis this quarter, your volumes are, at the higher level, but the profitability is not. So, has any realization got impacted sequentially?
No, you may not. See, the distribution volumes, depending on the mix, there could be slight variations. Like in liquid, it depends on the kind of product mix you do. Similarly, in gas, in distribution, we have auto LPG packed and bulk. So this time we have done more of bulk than packed and auto. So therefore, you would see a slight change in profitability.
Okay. But more or less, our realizations and all are intact, right?
Yeah, absolutely. They are intact.
And sir, just some word on how the industrial business, the Morbi side is doing?
Oh, excellent. We almost are doing, we have said that we have done better than the previous quarter.
Better than the previous quarter. Okay. Okay, sir. Thank you very much.
The next question is from the line of Dr. Amit Vora from the Homeopathic Clinic. Please go ahead.
Good afternoon, everyone.
Good afternoon.
First of all, thank you to the management for the excellent results, and I've been grateful to the management.
I request you to use the handset. Your voice is muffled.
First of all, I'd like to thank the management for this excellent set of results, and also thankful to the management because I've been investing in Aegis since 2000, in the year 2000. It has been a good returns from the company. That is my first thank for that. And my question is that, sir, you've been giving good dividends, but if you could just consider buyback also, because over the world it has been seen that companies with buyback give better investor results.
Yeah, thanks. Thank you very much, Dr. Vora.
Yeah.
Yeah, thank you so much for your kind words, and the board will definitely, we consider all options, including buyback, dividends, and so on. So we will definitely keep that in mind. Thank you.
And one more question is, sir, June, as you had said in previous meetings, that June quarters are generally lower than other quarters. So do we expect the coming quarters better than the June quarters?
Oh, we always aim and wish, and we are quite positive.
And one last question, sir, about KGPL deadline. Any idea by when it could start? Kandla Gorakhpur pipeline?
We expect that to commission by end of calendar year 24, but they of course say it much earlier. But we expect that to be commissioned by end of calendar year 24.
Thank you so much. That was for now. Thank you once again.
Thank you. A reminder to our participants, please press star and 1 to ask a question. The next question is from the line of Mayank Bajaj from Oculus Capital. Please go ahead.
Good afternoon, sir. So in terms of container, the LPG terminals, can you throw some light on the volumes individually about the terminals? Can we have some data on that front?
We do not give terminal-wise individual volumes. We only say all aggregated logistics volumes for all the terminals put together.
Okay, no problems. So can you get some light in terms of the pricing for all the terminals? Are they same for all the terminals?
Same.
And sir, in terms of Kandla, how are the volumes shaping up? What is your plan in terms of the 100% capacity utilization? What is the target that you are looking at in terms of the capacity utilization in Kandla?
We always say that LPG terminals are not constructed for a capacity to last for 1 or 2 years. They are constructed with a capacity of throughput so that the customer's growth is taken care of for more than 5 to 7 years. So initially, every LPG terminal begins with a 20-25% capacity utilization, and then it keeps growing year on year. Similarly, Kandla, our expectation were of 25% capacity or 20% capacity utilization to begin with, but it has surprised us and is doing better than that.
Okay, and any idea on the JNPT terminal? Are we doing something on that side? Because since our Bombay port is completely utilized, are we planning something on the JNPT?
We have just acquired a land parcel in JNPT and are constructing our first storage terminal, but that is for liquid cargo, and the construction is in progress. And we have already said that it should be commissioned by FY2024.
Nothing on the LPG side? Because
no, we are still not got to that. So we will see how things are and what kind of opportunities come.
Okay. Thank you. That's it from my side.
Thank you. The next question is in the line of Dishan Jain from Concall Capital. Please go ahead.
Yes, am I audible now?
Yes.
Yeah, thank you for the opportunity, sir. I just have a basic question, like, I wanted to know how do you maintain the capacity utilization of both the divisions? Like,
Sorry,
can
Dishant,
you
your voice is now getting muffled. Please use the handset mode.
is it audible now?
Yeah, slightly better. Please go ahead.
Yeah. So, sir, I wanted to just to get a sense of how do we measure the capacity utilization of both the divisions. Like let's say like last year you did a volume of 33 lakhs metric tons and we had a throughput capacity of 96 lakhs metric tons. So like simply do we divide that or is there any other way to sense that?
Yes, you divide that. So that is 33% of the capacity utilization which was there the previous year.
Okay. And those distribution volumes and sourcing volumes are not included in this utilization, right? Or
If the distribution volumes have come from the terminal which we own, then throughput also would be there for those distribution volumes. Yes, in fact, we do it only from our terminal, so it is included in that throughput. The distribution division also uses the throughput.
so basically 33 lakhs plus 5 lakhs last year divided by 96 lakhs. Is it correct?
You have to take the whole 33 lakhs, right, for the 96 lakhs utilization. You have used the terminal.
So the 5 lakhs is included in 33 lakhs.
Sorry?
So the 5 lakhs of distribution volume is included in gas volumes of 33 lakhs.
Oh yes, because it is done by our subsidiary, a different company. Yeah.
Okay. And then, and what about the liquid division? Like, how do we measure it?
Liquid division, throughput is not important in liquid division. So what we always tell people is that the capacity, which is 1.6 million as of now, we normally say that there is a rate of 3,000 rupees per annum per CBM of space. So that is the potential revenue, average rate to be realized. So that is the potential revenue. Now, how much you reach near to that is the kind of benchmark we use within our company to determine the utilization.
Okay, sir. Perfect. Okay. And just as a clarification that the whole distribution business is with Aegis, right, and not with under the JV.
Yes, this is at the holding company level.
Okay. Thank you so much. Thank you.
Thank you. A reminder to our participants, please press star and 1 to ask a question. The next question is from the line of Suman Kawatra from TechFin Consultants. Please go ahead.
Yes, morning. Congratulations for the excellent numbers. I hope I am audible.
Yes, you are.
Okay, fine. Now, I think in your presentation, you have given 10 points. We have almost completed your expansion, linkages, everything. So can we expect a higher growth rate in the coming year?
Yes. So, as I mentioned in the last conference call, and I think you're referring to the presentation, the investor presentation from the last conference call.
Even the present one.
Yeah, that's right. So the projects that we announced, significant, I think 1,750 crores worth of projects we have announced are of course now under implementation. So the list of 10 items that you saw there are actually already completed, and of course they are having an impact on our the next couple of years of results. But the big growth is going to happen because of the 1,700 crore rupee expansion, 1,750 crore rupee expansion that is unfolding as we speak over the next 24 months. Yeah.
Okay. So what kind of growth are we expecting coming here in the next year?
You mean growth in profitability and so on?
Yeah, EBITDA, whatever.
Well, generally speaking, we don't give specific guidance, but
we have time and again said on print also that we expect from FY22 to FY27, a 5-year time frame, we see enough visibility to say that the EPS growth would be at a CAGR of 25%.
Okay. All right. Thank you.
Thank you. Any participants who wish to ask a question at this time, they may please press star and 1. The next question is from the line of Sagar Sanghvi from ADD Capital. Please go ahead.
Yeah, thanks for the opportunity. Congrats on very good set of numbers. Sir, I have a very basic question. Over a long term, if we look at the company, so right now we are into liquid and gas. Any thoughts of entering into complex chemicals, transportation as well as logistics, given your JV partner Vopak also is into complex chemicals and the board and within board members, a technical director of Vopak sits on your board. That's it.
Yeah, it's a good question. Thank you so much. But I just wanted to remind everybody that Aegis Logistics, with or without Vopak, has been handling complex chemicals for at least last 25 years. And in fact, the exchange of information about how to handle complex chemicals is both ways. We have taught Vopak a few things, and Vopak has taught us a few things. So we do, in fact, handle very interesting products. Of course, they are we have to be very careful about how we handle them and so on. So we do handle them in liquid side and indeed in the gas side. As you know, LPG is not something that one takes lightly in terms of safety and so on. So we are definitely in that business already. Thanks for your suggestion, but we already do that, and we'll continue.
Any new products into the pipeline that you are looking for, which are not currently transported at your terminals?
Yes, there is a continuous stream of new products that are coming in, especially as a result of the fallout from the disaffection with the Chinese policy on COVID, and also the way things are going with the Chinese economy and so on. We've seen a number of customers who are bringing new products into India and exporting new products out of India. So definitely that's happening on a daily basis.
So how do you see margins panning out for that the new products? So what percentage of the business within liquid would be a high margin kind of business?
There is a constant. We do handle, of course, vegetable oils as well, edible oils. That is a significant part of our business. So we handle petrol, diesel, and the more complex products. So it's quite a mix. It's a mix in terms of both in terms of the ports. For example, in Mumbai, since we are situated next to the two oil refineries, we handle a lot of petrol and diesel in Mumbai. In Haldia, we handle a lot of, we don't handle petrol and diesel at all at the moment, but we handle a lot of vegetable oils and other more complex chemicals. In Kandla, we handle no petrol or diesel, but we handle a wide range of complex products as well as vegetable oil. So the margin mix, varies on a quarter-to-quarter basis, depending on what products people are bringing into which terminal.
Okay. And the last question on Haldia terminal. So, sir, a couple of quarters back, we had a volume loss because one of the anchor customer went to their own terminal. How do we see Haldia spanning right now? Are the volumes back to normalized levels?
Now they are back to normal, and we'll have a natural growth, as we have always said, 7 to 10% year on year. So that's what it is. We are back to normal throughput volumes at Haldia.
Okay, perfect. Thank you. Thanks a lot, sir.
Thank you. The next question is from the line of Dikshit Doshi from Whitestone Financial Advisors. Please go ahead.
Yeah, thanks for the opportunity. 2-3 questions. Firstly, can you just highlight a bit on what led to such a high growth in the distribution segment over last 12 months?
Yeah, distribution, bulk distribution. In the year FY23, we have pushed for LPG/propane as an alternative industrial fuel, and there has been quite a acceptance, especially industrial clusters, to name Morbi, where we have LPG as a fuel is competing well. So that has led to a focus and push on distributing LPG as an industrial fuel in addition to fuel for cooking purpose. So that has seen a big ramp up as far as distribution volumes are concerned. This is, I think, the fourth quarter that we have done well and growing quarter on quarter. So yeah, it establishes our faith and our view that LPG propane is definitely a very competitive alternate fuel for industrial use. Also.
Okay. Now, so basically, just to understand, so in distribution segment we have industrial, commercial, and auto gas. So is it fair to assume that most of the growth is led by industrial because of this Morbi thing, and maybe normal high teen or teen kind of growth in auto gas and commercial household?
Even pack cylinders, because pack cylinders are also going for industrial use. So the customers who do not have storage facilities, small units, would take this, because that is the reason we have pack cylinders of varying sizes from 2 kg all the way to 450 kg. So, different class of customers would want different sizes of pack cylinders. So that segment is also growing. Auto LPG is where we need to now push. We have of course started with universal stations where we are also dispensing petrol and diesel. Those volumes are not recorded here, you see, but they do generate margins because it's a universal station. Though we do not distribute, we distribute under a marketing arrangement with Naira, petrol and diesel, but we do get our share of margin by distributing petrol and diesel. So that segment also, if you do not really focus on the volumes, it is contributing quite a bit, and we are pushing for more and more of these and also trying to push volumes. But yes, you are right. Industrial bulk distribution is the major growth if we really count the metric tons.
And do you see this scenario sustainable? Because I understand that most of this shift was happened due to the sharp increase in the natural gas prices.
Natural gas prices are the lowest today. This about the abnormal pricing of natural gas was 6 months or 9 months back, but they are now at its really lowest level. For example, Morbi natural gas is being sold at only 38 rupees SCM. In spite of that, LPG propane is 20 to 25% cheaper today also. So, the prices apart, calorific value of propane is, or to say the other way around, natural gas calorific value is only 75% of propane. So that itself gives it an edge. And also natural gas is, to import is far more difficult than to import LPG or propane. Also the macro scenario globally is far more soft as far as LPG and propane is concerned because all those developed countries want more natural gas than propane because they have severe winter and they need tons of gas as a fuel. So therefore, if you look at all of these factors, we feel LPG propane is here to stay as an alternative competitive fuel for industrial use. Also the fact that India is still heavily dependent on solid and liquid fuel for industrial use like coal, briquettes, furnace oil, diesel, kerosene. We will definitely see a transition. At what speed is of course a question mark, but that transition will bring in more and more demand of gas, natural gas as well as LPG, maybe going forward ammonia and hydrogen. So it's a transition from dirty fuel to clean fuel which has started, will not stop. It's just how much and how soon would be the question mark. So we are very bullish as far as LPG and propane is concerned. That it will definitely grow at a very good growth rate.
Are we considering any options in the hydrogen distribution side?
No, never say no to anything, and we definitely have a very good partner in Vopak who has done a lot of work in many other products like ammonia, like natural gas, like renewable energy, like hydrogen, etc., etc. So we are always discussing opportunities, but they have to be sound economics wise, and there is always a question of timing them well. So definitely work is there to see if any opportunity of those sorts can be executed in India and would throw profits more and more for the company.
I think if I can just add there to what Murad said. Look, we are constantly looking at new opportunities along with Vopak, especially on the gas side, because we have really emerged as a very strong company in handling LPG, which is of course a gas. And I think the only thing I would caution is that many companies make big announcements. Our strategy is to only make the announcement when we are absolutely clear that the return on capital employed, is sufficient to justify the investment, and then we will definitely make announcements. So, I think that's all on the news.
Yeah. So again, to put it, new product knowledge, management bandwidth, technical expertise, money, those are not the constraints. It's what will work at what time in India. That's the question to look at. So no other constraints. But so we constantly, like Mr. Raj said, looking at opportunities with our partner to do more and more infrastructure work on logistics in India.
Okay, two bookkeeping question. Firstly, I have one old number where our EBITDA per ton in the throughput was around 1100 and auto gas 10,000 and industrial and cylinder around 3 to 4,000 rupees. Is it more or less same currently?
Yeah. Yes.
Okay, it's more or less same. Okay, and last question. So over next 24 months, many capacities are going to come up. So let's say by next 2 years, this 1.6 million ton in liquid and 96 lakh ton in gas, this capacity will go up to which level?
Yeah, so we have announced a Mangalore project which we say has a capacity to throughput 4 million, and Pipavav we have announced cryogenic 48,000 metric ton, again taking the capacity of Pipavav to 4 million. So that is an additional of 2.6 and 4, 6.6 to 9.6. That is where the gas capacity will go. As far as liquid is concerned,
I think he wanted static capacity of gas.
No, he said 96 lakhs, right?
Oh, sorry. Okay.
As far as liquid is concerned, 1.6 million, we are adding 0.3 million as of now. So that would take us to 1.9 million.
Ladies and gentlemen, it seems that we have lost the line for the management. We would request all participants to please remain connected while we reconnect them. Thank you. Ladies and gentlemen, thank you for patiently waiting. We have the management line reconnected. Over to you, sir.
Yes. Yes, I think that's it. So 1.6 million liquid with 0.3 under construction would take it to 1.9 million. So that's about the capacity.
Mr. Doshi, may I request you to join the queue for any follow-ups?
Yeah, thanks.
All right, thank you. The next question is from the line of Jolian John Younglu from Amiral Gestion Pte. Limited. Please go ahead.
Hello, am I audible?
Yes.
Hi, sir. I just wanted to ask, I was looking at Vopak, like estimates for the JV, and I think on their side they are indicating a 6% revenue growth over 5 years, whereas we are guiding for a 25% CAGR over the next, 4 or 5 years instead. So could you explain to me the difference in the assumptions? Why are we so different versus their estimates?
Oh yeah, yes. We have businesses other than what businesses we have joint venture with Vopak. So it is not only exclusively joint venture with Vopak that is Aegis. Aegis has got distribution business. It has got Mumbai storage facilities, which is outside the JV. So therefore, we expect our growth in EPS at 25%.
Okay. So would you disagree with their numbers? Because, I mean, they do still base their numbers on the JV that we are doing a lot of capex on, and a lot of the capacity that's coming online will be in the JV as well. So do you disagree with that, like 6% number?
We have no idea how this 6% has come, so we are in no position to comment on that. However, what we can tell you is that it's a little bit of complicated thing, because this is consolidation accounting of a subsidiary of 51%. So all inter-company transactions are eliminated, and there is a matter called minority interest also, the working of which we have to do as per the Indian accounting standard, which has been prescribed. So all of this put together, what I can say is that we see visibility for our growth in EPS, 25% CAGR from FY22 to FY27. And we have already delivered in FY23, not 25%, but 29% growth. So we are very hopeful of, achieving what we have aimed at, which is 25% CAGR growth in EPS year on year from FY22 to FY27.
Okay, great. So I have just one more question. So could you comment on the impact of the upcoming supply especially from our clients? So specifically, I think IOC is going to commission one in Paradeep, HPCL in Mangalore, and I think further on, I think Kandla IOC has also announced like a big expansion to their 0.6 million to 2.5 billion LPG import capacity. So could you comment on all these expansion plans on how that might affect our own LPG terminals? Thank you.
Yeah, as far as IOC expansion in Kandla, I don't know how many years more it is going to take. So we believe that Kandla has got origin or two pipeline grade pass through Kandla. One is Jamnagar Loni pipeline, which has just upgraded its capacity from around 2 million to 3.5 million. And then Kandla Gorakhpur pipeline, which is being set up with a capacity of 8.25 million tons, out of which 1.5 is out of Pipavav, and I think Dahej is something around that, but all the balance is going to come from Kandla. So we see enough demand coming on in the ensuing years to take care of the capacities, which I don't know when, but may come up in Kandla. We are equipped to handle the growth with a 4 million capacity, of which already 25% is utilized as far as Kandla is concerned. As far as Mangalore, HPCL, I don't think anything HPCL Mangalore under construction, so we still don't know how much time it will take. Paradip IOC, we believe will have no effect on Haldia because we have an anchor customer called HPCL and not IOC using exclusively our terminal at Haldia. So Paradip IOC will not affect as such the LPG throughputing which we do from our Haldia terminal.
Maybe just for last upcoming supply, how about Adani's Dhamras on the east coast of India? How is that going to affect us?
Again, East Coast, Haldia, we have exclusive arrangement with HPCL. We will not be affected.
Okay, thank you so much, sir. Thank you.
Thank you. The next question is from the line of Harsha from the Lal & Brocha Stockbroking. Please go ahead.
Yeah, thanks for the opportunity. Couple of questions from my end. Firstly, when I look at the segmental information that you have given, I see that in the unallocable part, close to 500 odd crores have been added. So could you give some color on that?
Sorry, where have we added 500 crore?
So it is in the unallocable, the capital employed part in the unallocable segment.
Oh yeah, that is cash and bank balance, don't worry. That is the cash surplus yet to be invested into the segment infrastructure asset.
Okay. And the 1750 crores of capex that you have talked, is it in the JV or on the consolidated level?
It will be at the JV level now.
Okay. And I believe we have been talking a lot about the industrial LPG part. So what kind of volumes are we doing in industrial LPG?
Bulk industrial LPG, we did around 144,000 tons in this quarter versus previous quarter 116,000 tons and last year quarter 73,000 tons.
Okay. So what I want to ask is, say in the next 3 to 5 years, how big can this segment, the industrial LPG can go? So in terms of, can it go 3 to 5 times in terms of volume in industrial LPG?
We wish it does, but we always say that 20 to 30% growth year on year we expect.
And if you could, so I believe you said that the LPG in the Morbi division is close to 20 to 25% cheaper. So is it after considering the calorific value, considering that it has higher calorific value?
Yes, of course, because you should know, at the end of the day, the rates are compared versus the energy which they deliver or which they have. So it is always energy-based rates which are compared.
Okay. And one last question. So when I look at the Q1 FY23 import figures of LPG versus this Q1 of FY24 LPG import, I see a bit of a dip in the total LPG that is being imported. Any particular reason you would like to attribute?
What is your data source?
So I have taken from a government website.
So in the government website, there will be an asterisk and a fine print which says probably that private importers might not have been accounted for. So you please look at these plates, whether it is only national oil companies import data which is there or all the import data. Because we don't believe there has been a decline, at least in the ports at which we operate.
Okay, yeah, no issue. That is on my side.
Thank you. Any participants who wish to ask a question at this time, they may please press star and 1. The next question is a follow-up question from the line of Dr. Amit Bora from the Homeopathic Clinic. Please go ahead.
Thank you so much for giving me the opportunity second time. Sir, this 1750 crore, what is the ROC that you expect?
Our hurdle rate is always 15%.
15%. Okay. And sir, out of this capacity utilization of 1.6 million ton in liquids, what is the capacity are we using currently? What is the capacity utilization?
All our facilities at all ports except Pipavav liquid is utilized 100% plus.
100% plus. Okay. And last question, sir. Apart from Morbi, any other areas you're working on for distribution business?
Oh yes, we are doing distribution from Haldia, Mumbai, Kandla, or wherever we have. The
Industrial? Industrial?
Yeah, industrial, of course.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Lavanya Totala from UBS. Please go ahead.
Hello. Hi, sir. Thanks for the opportunity. I joined a bit late. I'm not sure if it was answered already. So there was slight moderation in gas segment margins. So just wanted to check if margins of gas distribution has softened in this quarter.
No, it has not, and I had explained it earlier that it is the mix now between bulk distribution, packed and auto LPG, which is, which will show slight variations. This time bulk distribution has been quite, it is 30% more than the previous quarter and almost 100% over the previous year Q1. So that is the lowest margin of the three distribution subsegments.
Okay. So going ahead, industrial or the bulk will be one of the, the growth driver. So is there potential further softness of this margins, or it's likely to sustain at this quarter level?
I think given the mix pattern, auto LPG will always grow slowly, but packed is expected to improve. So margins, I think, will stabilize going forward. Also, the fact that it would also depend on the cost of imports, how the prices of LPG behave. That may also be one of the.
Okay. Because with the calorific value, I think propane is still more beneficial than LPG. But just for SCM basis, it's now broadly comparable, right?
Oh yes, you can say that.
Yeah, got it. Thank you. Thank you so much.
Thank you. The next question is from the line of Saurabh Shroff from QRC Investment. Please go ahead.
Yes, hi. Congratulations, gentlemen. Just quickly on this distribution side, so we've obviously seen fantastic growth here over the last 6 quarters. My question really is that what have we done different? Because we had these terminals before, so is it just been a question of renewed focus after the GV and bandwidth getting freed up? And who are the main competitors here that we are either taking share from, or are we just driving more adoption?
This is regarding distribution, you're saying, right?
Yes.
Yeah, so distribution Morbi happened, so it's all a question of timing. We could get off our Kandla terminal commissioned, I think sometime in March, and during the same time, I think NGT had advised Morbi industrial cluster not to use dirty fuel anymore. So it was a question of an alternative fuel. And because we commissioned our Kandla terminal during that time, we were in a position to supply an alternative, competitive, environment-friendly, clean fuel called propane at a price which was competitive with natural gas, which was another fuel which was available for use by the industrial cluster. So similarly now our focus at different locations has been to identify industries where propane or LPG can work and can compete as an alternative clean fuel available for use by industries.
So is this almost a business development kind of an activity and not just a distribution or logistics activity? Is that the right way to think about it?
Yeah, we call it distribution.
I think there is.
Means what I mean is that do you have to sort of educate people that listen, there is this gas available, it is cleaner, it's probably more efficient calorific wise.
So what is sort of driving it is what I'm trying to understand. One is NGT, which is an external factor to us, but sort of internally, what is it that we are driving?
Yeah, I would, if I can just add there, I think you're right. There is definitely an element of business development in this because traditionally in India, LPG has been seen as a fuel for domestic cooking with some use in the commercial, hotels and restaurants and so on. And it was always, for many years, was a scarce commodity and, and so on. Gradually, as the industry has developed over the last 10, 15 years, with the entrance of private players and so on, there has definitely been an element of education, user education, to convert people from dirty fuels to cleaner fuels, and also the understanding that between natural gas and propane or LPG, there's not that much difference. Both are gases, both have calorific values, both have many of the same characteristics. And with some small modifications, one can interchange between the two fuels. And indeed, even if one wants to use natural gas, you can always have propane as a backup fuel, or you can have propane and have natural gas as a backup fuel, whatever, and so on. So there is definitely an element of business development in this. But many of the customers are pretty savvy themselves, and when they made the calculations, the economics was definitely immediately visible. Plus the fact that when we opened up the new Kandla terminal, we actually had capacity. We have never had any capacity in Mumbai. We've never, had any capacity in Haldia, because we were so busy with the throughputing business. So,
yeah, and also to just add here that the laws are now more sensitive to environment, and they are tightening. And for example, if now you go to renew your consent to operate, they would definitely ask you about alternative green fuel to be used in the unit. So those all factors, the fact that environment sensitivity has become more acute and authorities have become more strict, as well as the availability and the capacity which we have now, much more. We never had 4 terminals with 9.6 million tons capacity, right? So that all put together probably, and the business development which you say, I call it awareness. Yes, those all factors put together is leading to this growth.
Sure. And on my second question, this 9.6 million capacity that we now have, and you mentioned that obviously these terminals have 20, 30-year lives and are not built for 12, 24 months. So is it safe to assume that over a period of 5 to 6 years, you have enough visibility that Kandla sort of gets to close to 100% or absolutely optimal utilization? Because the reason why I ask this is that obviously the job we've done in Mumbai is just fabulous. I mean, in terms of what we've achieved there in terms of static versus throughput. So I don't want to use that as a benchmark, but in general, is that the sort of visibility that 5-6 years is the right time to sort of think that this 9.6 is fully utilized?
Maybe you should stretch it a little more, but yes, that is what we work towards, to utilize as much as possible our terminal. That is what the capacities have been created for. And we believe this transition from dirty fuel to clean fuel will certainly help in achieving those throughput utilization at the earliest.
And I think the other factor to take into account is that both Kandla and Pipavav are going to be connected to 2 of the largest LPG pipeline systems that India is building, and they're specifically chosen for that purpose. So even if those pipelines get delayed by a year, we are not constructing them. It is the government companies which are constructing them. So we know that sometimes delays do happen in government organizations. But given that caveat, these 2 terminals are extremely well positioned. If you look at our investor presentation, there is a nice diagram of how they are connected and to what, so on. So
also the fact that these refineries which have been producing LPG would now look to use LPG not for cooking gas but for their petchem. So that would actually reduce the production even more because obviously petchem they would get a higher value realization. For example, if you look at Bina refinery or you look at Bathinda HPCL refinery, HPCL refinery has already started their petchem. Bina is working towards. So by the time Kanda Gorakhpur works, probably Bina would have started their petchem and start using the LPG for petchem, leading to the replacement sort of, replacing the LPG which was either to being produced, now being used to petchem would then, be serviced by the ports from terminals like ours.
Got it. And finally, on these new cryogenic terminals that we are adding, is the reason just the fact that the vessels now are have moved in that direction? And secondly, is the cost of building them out significantly different?
Yeah, so cryogenic terminals is the way to go, generally speaking, because most of the gas in the world is now transported, with big ships, which are all cryogenic. And it's a lot safer as well than having a pressurized facility. Not to say that pressurized does not have a place, but generally speaking, very few pressurized new terminals are being built. So cryogenic terminals definitely, are the way to go. And what was your second question?
Is the cost to build them significantly higher than a pressurized terminal?
Yes, the absolute capital cost in total is definitely higher because obviously there's a lot more engineering and safety and so on involved with when you're dealing with negative 40 centigrade type of cryogenic facilities. The absolute, but if you ultimately look on a per ton basis in terms of the type of throughput that one can do, I think cryogenic still wins out.
So it is end up being sort of accretive net after the initially higher capex.
Yes,
correct.
Right,
correct. Yeah. And also to add to your earlier question that when you said Morbi is just an example, and Morbi was very price sensitive, but it has to follow. The whole country, so many small and medium scale units using dirty solid and liquid fuels, like even wood briquettes. So those all have to go, and the clean gases have to then replace them. So I think it's a huge potential.
And other than us and the oil companies, who are sort of the main players in this business?
Who are the what?
The main competitors in this.
So there are two foreign companies which are operating in India. One is called SHV Energy, which is a Dutch-based company, which is one of the world leaders in LPG, and they've been. We of course do business with them. We supply them, we buy from them, we sell to them, and so on. But they are an active player. And then there's a French company called Total, which operates basically in southern India, in Bangalore and that area, because they have a small terminal in Bangalore. So they are definitely they operate in this space as well. Reliance Industries, in a small way, they are also in the business. And then there are a couple of small private players who at the moment don't have terminals, but they buy from terminal. They buy their gas from other terminals.
Okay. Thank you so much, gentlemen. And all the best. Looking forward to it.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference back to Mr. Raj Chandaria for closing comments. Thank you, and over to you, sir.
Yeah, thanks very much. Some very insightful questions, and I'm really pleased to have an opportunity to answer all of them, I hope, to your satisfaction. As I said in the conference call, the long-term prognosis for the company is very healthy with all the growth projects that we have identified. While definitely quarter to quarter is important, but I do want to emphasize that really I think the company is in a really strong position, both financially and operationally, and from a business strategy perspective. And we continue to execute really well on the ground. So really proud of the team that is delivering on a day-to-day basis. Thank you very much. We'll look forward to communicating with you again at the end of the next quarter.
Thank you very much. Ladies and gentlemen, on behalf of Aegis Logistics Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.
Thank you.
Thank you.
Please subscribe and press the bell icon to never miss another update.